Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar has maintained a slightly positive tone in terms of the fact that crushing the 60-day moving average on Friday at 67.2025 has allowed a little bit more upstep and now takes the challenge towards the area of 67.80.90. I'm a little bit cautious here because the MACD is still somewhat holding to a mixed or slightly swaying to a weaker pattern here, although the ADX is trending to a bull case. The RSI is overbought. However, the market still expects to see further challenges as we wait for this week's US inflation data, which could actually rattle the market if it comes or even somewhat stronger than expected. That would give further scope for the US Federal Reserve to maybe hike rates again in June of 25 base points. Let's see if the market does retreat, as we can see back here in April and also going all the way back here, back to February this year. The market found good supply close to the 68 mark or 68 cent mark, and therefore could see the down challenge looking towards 67 figure 15. A close beneath there would reinstate the downside to 65.90 and reassess. The euro, well, the market's finding a little bit more of an upstep after Friday's whipsaw price action, and that was all on the back of the US job data. After the non-farm payrolls came in better than expected of 253,000 jobs in April, coming much higher than the 180,000 gain expected though. While the unemployment rate fell from 3.5 to 3.4. Following the last week's US central bank rate hike, US Federal Reserve Powell didn't rule out future rate hike increases in his press conference. However, he did hint at the possibility that the interest rate hikes may be their end, that is coming from the previous wording, which was saying that he anticipates that further rate increases will be necessary, but instead said it would monitor incoming data to determine whether more increases may be appropriate. So in that case, then we look towards this week's US inflation data, and let's see how the numbers unfold there. Looking to the top side for the market, we can see that there has been at least two or three attempts at the level around 110.60.75. We posted a bearish outside range day and one attempt, rejected the third, and another bearish outside range day, and therefore does give further conclusion that the market might actually do this again and still focus on the downside, which is around 109 figure 25. The dollar index still around that 101, so therefore could see this top side failure and look down towards that bottom side, as I mentioned. The dollar yen slightly picking up pace here since last week's downward turn, and that was towards the close or around the region of 132.60 to 133. I feel the market could take a further step up, and that is towards 135 and not ruling out 138. As long as we see continuous demand towards this bottom side of the range, that close to 133, then I feel that the bulls will eventually overwin the challenge. Super Thursday's looking to a 25 base point rate hike from the Bank of England, and it has kept the market somewhat bullish and therefore looks towards the targets of 126.55 or around 127.15.30 and reassess. Any pullback looks towards 125.72, the base around 125 figure 25. The market was very volatile on Friday and also Thursday to that point when the market retreated from that key point and a level last seen on two attempts close to 2068 to 74-ish. I feel the rejection has put the downside in focus towards the region of 1,994 and reassess from there, because if we see a break, that would give further scope to the downside and coming in around 1,978 to 84. Any upside attempts should be limited. And wrapping up with oil, I still feel the bulls are in control, or at least navigating towards that key level after taking out 71.40.60 from last week's call from the bounce of 64.40.80. And let's see how 72.55.65 is played. A break here would give further scope and maybe even see a squeeze up to $74 a barrel. Well, that's a wrap for the start of this week. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.